All right, welcome back to the Short Vol Show live. And when I first came back to the stock market and trading, I've been away. I left in like 2004, and I came back online. And I've been trained as a pro, and we were taught that everything was secret. We're not supposed to tell anybody about options trading, what we do. So I decided I'd check a little bit out online, and was very skeptical. And I came across this fellow's site. And he had this awesome information, and he seemed to know everything about options trading and stuff, although he wasn't like coming from my world of the SIBO and pros. And so I was very, very impressed, and I've sought him out and recommended tons of people to him, and he's finally gotten him on the show. So welcome, Kirk. How's it going?
Good man, thank you. I appreciate it.
Yeah. Um, that was quite the genesis. And the first time that you had me on your podcast, I didn't quite understand at first, like whether I was going to be on your show or you were going to be on mine. And also, I kind of botched it at first. Like I missed the first take for it. Like we were supposed to meet up, and I still feel guilty about that, but
It's okay. That's okay.
yeah, it's like we were just talking about a second ago. This stuff can be quirky when you first start out. Like,
Film producers or like audio guys, we're just yeah.
yeah,
Sometimes it doesn't work for us.
but yeah, I mean what I say when I was just super impressed by your stuff. And SIBO, at the SIBO there was a range of people. You'd think, oh, it's all professionals and they're all really smart and stuff, but like my firm prided itself on having a lot of like background knowledge and stuff, but there were a lot of people that were just kind of swinging from the hip out there. And like I said, we kind of kept it secret. And to have a resource like yours online is just a huge benefit for people, because I know back then there was no way, if you weren't in the professional world, to figure out about options other than buy these really dry books.
No doubt.
Um, so how did you get started as far as being a teacher of all things options?
Yeah, I mean, I think I'm just a student of the game myself. Like I've always loved options trading, and it actually never really started as options trading. It started, I guess, like way back when, if we have time to go through it, and like so people understand the process. But this is something I thought about, and I even told my team this 4 or 5 months ago. I told my team, like, like really what I figured out finally was my reason for options trading and like why I do it was because when I was a kid, like growing up, my parents were awesome. Like I never take anything away from my parents. Taught me so much, right? But my parents were both in the same industry, like financially. And so my entire childhood, like it was like up and down roller coaster nonstop. Like when they were doing well, like we knew it. And then when they weren't doing well, we knew it. Like we felt it. We didn't know, and they went through two bankruptcies. Like that's a terrible experience for people to go through. And it wasn't that they weren't smart. It wasn't that they weren't like doing the right things. Like they just went through things where like they had no control. Like the market was the market, and took them out, twice. And so for me, like I learned that lesson very early on. And I think whether I consciously knew it or subconsciously knew it, like I was on a mission to figure out a way to stabilize everything and reduce volatility. And like, I don't know why options trading ended up becoming that, but like I was an investment banker in New York for Deutsche Bank, and that was great for the time that I was there. But that was right as deals were crashing and the market was falling apart. And so like 1 year you could have a $200,000 bonus, and the next 5 years you could have nothing. And it's like at that point, even doing that, I was like, well, this is crap. Like it's terrible job and terrible hours, and like I love the people, but being there is absolutely horrendous. You never see the sunlight. And I was like, so if I'm going to do something, maybe I should do something different. So then I was a read analyst, and I realized being a read analyst that a lot of your job and is really kind of in some way like tied to who you can sell your research to. So as a read analyst, if I was going to like write up a research report, if I always had a sell recommendation on somebody, like that does the bank no good, right? So and like that's a conflict of interest that like I don't know. It's just like again like that. Now I was stuck in this like mode of I couldn't really find my stride of like everything seemed to be out of my control. There was nothing that I seemed to really have control over, even though I was in potentially great industries and like working in things that people wanted to do. And so I finally started like really trading. And I had an intro to trading when I was in New York on a trading desk. And I saw kind of how the whole process works. And I've always been interested in doing it and like had an account, whatever. But I finally like made a concerted effort, I guess, to try to figure it out. And I started day trading at first because that's what people do. Like they're used to trading, and that's horrible and horrible. There were good days and there were days, but just like it's not me. Like I can't pick direction. I'm bad at that. Like it is what it is. And so day trading didn't work for me. I tried forex trading. I babysat trades all night for like 2 days in a row one time, and that was absolutely horrendous as well. Like just day trading with a ton of leverage and huge, potential risk. And so I finally like really kind of got back to options trading. I was like, okay, if I'm going to do options trading, I want to figure this out. And no doubt, like that day or whatever that week was that I just really decided to go after options trading has been just a continuous like life journey for me. I mean, like even right now, like you saying, which I appreciate, like we know a lot about options trading. I feel like I still know very little. Like I'm still in a like much more of like a consuming information mode. Like I love reading a bunch of stuff. I love, doing more research and figuring out what works and what doesn't work. So I'm on this just continuous journey to figure out how this whole thing works, and I'll never figure it out, which is cool. That's what I like about it. Like it's never a destination, but I think we've at least figured out a lot of really cool things that we can share with people.
So what was the industry that your folks were both in that you were talking about at first?
The mortgage industry.
Oh, okay.
Yep. So when real estate was good and mortgages were good, they made a lot of money, and when it wasn't, they didn't. So, and that sucked. I mean, as a kid, like I remember Christmases where we didn't have Christmas, So
And so, when you were saying you were right research, are you talking? What was that job about for people that don't know about that sort of thing?
excuse me. So yeah, so REITs, real estate investment trusts. That's what I was researching. So I was an analyst that would work in a team. There's three of us, and we would publish research reports on like housing REITs. We covered apartment housing. We covered triple net, like NNN and O and AVB and all these other like UDR, like all these other research or apartment buildings and triple net companies. So we would just talk to management. We do our research on the industry and the portfolio, and we do the whole regular buy sell recommendation stuff.
All this stuff is fascinating to me because although I was a professional in the finance industry for a while, it was like floor trading, which is sort of like the Wild West, and I wasn't like in the upstairs, more refined world of analysts and stuff. It's funny how you talk about analysts, and having to both have a customer and A and B kind of be recommending stuff. You have to be kind of saying the right thing that they want to hear in a way, it seems like. And I know that there's been some existential crises in the analyst community over time, and there was a big one at one time, I guess maybe 10 or 15 years ago, where like everybody was either recommending stuff or they weren't saying anything, and it kind of switched a little bit to be a little bit more fair. But I've always like not had a whole lot of respect for financial analysts
Neither.
in general.
And I was an analyst. So that's what I'm saying. Like no, I'll take it with maybe like two sides. Like I respect the professionals and like what they do. I just think ultimately like the research has proven, and I've like learned through my own experience, which I'll share here in a second, like one particular example. But like the research shows like most analysts are not great. And even if they're great for like a certain period of time, they're not consistently great. And it's not that they're not good like analyzers of companies and valuations. It's just that usually a company's valuation doesn't match with what the expectations are in the market. So like when I was in REITs, and particularly in triple net REITs are basically a 30-year bond on a basket of companies. I mean, like that's what it is. Like a triple net REIT is going to write a 30-year or 20-year lease on a Walgreens or a CVS. And so basically what you're underwriting is you're underwriting Walgreens and CVS, right? Okay, well that's easy because we know what the value of Walgreens is. We know what their portfolio makeup is. We know what likelihood is they're going to pay this lease, and it's very structured. It's this rent and this rent and this bump every year or this bump every 5 years. Like there's almost no real hard analysis that goes into it. Yet at the end of every quarter, when you know exactly what the cash flows are going to be, the market reacts totally differently. So like there was one quarter where it's like the CEO and CFO, like they knew they had a great quarter, right? They knew they had a great quarter. It's like a little bit above average, and the stock dropped, right? So like the reaction of the market is not the value of the company. And so for that reason, it's just as much as analysts are great people and they do good job, it's just, it doesn't serve a lot of purpose. And what you were saying about like, in my particular case, the bank that I work for had a broker or like a retail arm. And so I think that was a conflict of interest, for me. So like having a retail arm, but then having an analyst arm, it's just like doesn't work. So a lot of the ones now that don't have a retail arm, just like, okay, that's great. They remove a barrier, but it still doesn't change the fact that what they publish and what the market does might be two different things.
Yeah, and that was part of the existential crisis with the analysts was that they were attached many times to products that companies were trying to sell, and that was the big problem and the big skepticism about not just them but about Wall Street for such a long time. And I guess that you came around to that knowledge that we try to impart on a lot of people, that the stock market is if you have all the numbers, some people they feel very safe within this framework of like, I'm going to analyze all the numbers and figure it out. And the reality is it's not figure outable in a certain regards, A, and B, it's a popularity the stock market can be seen as a popularity contest at times. It can, it shifts gears, and it's such a tough game. That's the thing I try to tell people the most, is just, this is a tougher game than you think. There's smart people out there, and it shifts gears all the time.
Yeah, it's always a new thing. I mean, like right now, I like the fact that, like, for me as an option seller, the fact that Trump has these like random tweets, like, totally like reinforces this like black swan that will continue to happen in the future, and it's always going to be a different catalyst. It's always going to be a different thing. But like right now, the black swan is Trump tweets. So like everyone is always on edge about Trump tweets. In the future, it might be something else. In the future, it might be some war, or it might be Russia, or it might be this, or it might be that. There's always going to be a catalyst, and so it constantly changes. But like the foundational element of like, I don't know what's going to happen tomorrow because I don't control Trump and his tweets, right, is still there. And so I don't know. There's a lot that we can unpack, I guess.
So okay, so you became attracted to options trading, and maybe made a little money doing that. But how does one get from that to being like a major educator online to other people about trading? How did you make that journey?
Tripping into it. I did not want to be here eventually. Like I did not like have a goal of doing this. The first site I did was thebullsandbears.com, which was incredibly embarrassing, but it had like Z's at the end of it. But I didn't care, but I was just like blogging about what I was doing. And so I would blog to myself or any of my friends that might be like watching or doing, like paying attention. And it'd be like a paragraph or two paragraphs, or I'd share a chart, or I'd talk about what I was doing. And eventually people started asking questions. They started saying, well, why'd you do this? Or why'd you do this? And I'm saying, well, I did this because this, or I did this because I have this concept, or I learned this thing. And what eventually just kind of dovetailed out of that was that I got sick and tired of writing emails. In fact, we get like 250 emails a day right now, and I still tired of writing emails, which is why I just continue to push more content, because I think if I can just help push more content out to people and answer maybe a particular question a little bit, like in more of a like video format or more of an outline format that can really help out so that they don't have to email me again, then that helps out. So that eventually became, well, I have all these links that I'm sending in an email. I used to send out this email with like 30 links of all the blog posts and like descriptions. And then people said, well, why don't you put together a video course? And I said, well, okay, well, I'll put together a video course. And now we've done like major iterations to that. So, I mean, ultimately, I feel like we're at a place now, truly, it really only happened maybe in the last 2 to 3 years. Do I think we're really at a place where we could become, and we should be, the major leader in options education? Before that, I think it was still very much like a hobby blog. Like I really didn't think that we had enough of a presence to actually make a difference. And now I think we're going in a different direction with, what we're doing with software and research, that means that education is that much more important. So it really kind of happened as a 10-year overnight, like accidentally.
Well, I'm shaking my head as you say that, because that's sort of the way I got into having a YouTube channel and whatnot, was just getting tired of explaining the same stuff to people sending me emails about it, and figured it was easier to just start making videos so that I didn't have to explain it each time.
Yeah.
I was explaining over StockTwits with 140 characters, and it got tedious after a while. So I definitely feel you on that one. So for me, when I was a market maker, part of the reason I was able to take a lot of risk and do that was because I was single at the time. I didn't have a family around, I didn't have the pressures of having to bring home, pay for the family. And I was able to take risk because it was just me. Does having a family for you now, does it change your calculus as far as as far as what kind of risk you're willing to take? Just in your trading
Yeah, I mean, I think
life?
that it yeah, I mean, I think it should for sure. Like if you have a family and you have people who support, like you depend on and they depend on you, like that should change how you do things. Do I think that I would have ever been the type of person that takes a massive amount of risk? Probably not. And that's just like from my own like upbringing and like what I went through. Like I will never be the type of person who chases the highest possible return like strategy. And say that all the time. Like if you're looking for the highest possible return strategy, it is definitely not me. Like I'm somewhere in between that and, like hopefully not losing money, right? And so the idea for me is to reduce volatility in my income. And that, I mean, like broadly speaking, like that's why I invest in options. That's why we started investing in real estate a long time ago. Like that's why I do all this stuff because I don't want any one source. Like what I do in options trading is exactly applicable to every other like facet of my life. And so I've always grown up as a student of finance. Like I've never ever had a car loan. I paid off my student loans like quickly after I got out of school. I've never carried credit card debt. Like don't have it. I mean, like I just do all the basic stuff to reduce all that. So I don't have to feel like I need to take a ton of risk. I think like a lot of people get into options trading because they have something that they want to do or some like void that they have to fill and they have to get there quickly. And then unfortunately that's not the right mentality to have when you get into it. But people do, like I gotta make $5,000 by the end of the year. But you get into the market with that type of mentality, it's doomed to be a failure.
Yeah, I think different people have. There are some people out there who do have this personality of taking risk, and there are a very small number of people out there who are actually good at it,
Yeah.
of being, taking a lot of risk and managing it successfully. But that's not where you definitely want to start. And I guess I should have asked you before I asked you that question. I'm just curious. Do you actually trade like your own positions like concurrently with your business right now, or and what sort of percent of your life is actually like doing options trading by yourself as opposed to like working on the business right now?
Yeah, I mean, all the trades that I make are all the trades in my account. So, like, if I say that we're going to do like three contracts, it's not because I recommend three contracts, it's because I'm actually trading three contracts. So, whatever I put out there is literally my trades. So, win, lose, or draw, it is what it is. And it's just easier for me because, like, I'm not going to say, oh, I have this model portfolio and I have this model portfolio. It's just, this is what I'm doing. And, people can choose to watch it or not watch it. So, as far as like percentages, like, 70% of what we do is like allocated to options trading. The real estate, cash, other things that we have like equity in businesses, things like that, that would probably be the other 30%. That to me is all like building, streams of income that you self fund. Like our real estate portfolio, we never touch and we haven't touched for like 6 years. Like we haven't added money to it since day one. We bought one property and we let that snowball into what it is now. So like that type of thing to me is how you should invest. I mean, again, me personally, like I think about things like that. Equity in businesses or other things that we do, like we invest money and we let it snowball, win, lose, or draw, right? As far as like day-to-day activities, like I love doing option alpha because it keeps me focused on doing like using my strategy and like working my techniques and defending my position on a constant recurring basis. I would probably not be the type of person who could walk away from the markets every day and not do anything and not touch my positions. So because I have people who say like, well, why didn't you do this or why are you doing it this way? I really have to focus on not touching things, sticking to my rules, making sure I'm being systematic. Because if I don't, then I've got, 4,000 people who are like, well, you just broke like your cardinal rule by overallocating or whatever the case is. So
Yeah.
most of my activity is spent not doing like trading activities. It's actually not a lot doing option alpha stuff. Like I spend most of my time with my kids and like they're sleeping right now and like there's like toys and drawings all over the table and stuff. And so
Yeah.
I'm just here with them doing that stuff.
that I guess when you're transparent, you have accountability to all the people around you. You kind of have to practice what you preach when all these people are watching you do your
Trader.
trades.
I tell people all the time. The fact that I have to explain what sequencing risk is 4,000 times every year, like, makes me a better trader, in my opinion.
So I find when I'm thinking about what to teach people that there is definitely a gap in our society between there's definitely a lack of education, not only about trading but about math, about how to say about saving money, living below your means, and this sort of thing. Um,
Yep.
what could we like? What would the perfect curriculum for like school be that could would you envision yourself like going off on some sort of like helping develop a curriculum for actual school for like younger kids, or for college for options trading and this sort of thing? I mean, how do we bridge the gap between the 80% of Americans who think that buying scratch tickets is the way to wealth to this, the esoteric, the smartest of your customers who know, position management, portfolio management, this sort of thing? How are we going to get the American public to sort of learn more about being responsible with money and just the basics, being able to save money to invest? It seems like such a challenge to me that a lot of people online just ignore. They kind of assume everybody has a basic knowledge of everything that we take for granted, but there's this huge section of the population that is just really struggling with survival, I guess.
Yeah, I don't know. I don't know if I'll ever like dive into like the personal finance side, because I feel like, one, it's probably oversaturated. Two, I'm not sure there's much I could add other than just like live below your means, right? Like, there's like simple concepts that are universal, I guess. For me, like, this is one of the things I love about Option Alpha. Like, I think the fact that we give out all of our stuff for free, like for training and research, and we do so much, hopefully, and like content and like idea generation, and just like showing other people's research and sharing ideas, is to help people understand that there is a different viewpoint, right? Like, and I just recorded a podcast today about like the crazy like correlation between bonds and stocks. And like over the last 20 years, bonds and stocks are highly correlated to one another.
Hmm.
But you ask a regular person, and they would say, oh, well, a regular diversified portfolio would be just bonds and stocks, right? And that's fine. Like, that's a good start. But actually, bonds are highly correlated to stocks, right? So if you actually look at the numbers, like, then you really don't get much diversity. You'd be better doing like stocks and silver or something like that. That would give you much more diversity. So I think it's showing some of the data points and like proving the math, proving the numbers. I think the other thing is, and it's funny that you actually asked this, because my wife is a teacher. And so when I developed Option Alpha, like in the official form with like video courses, I kind of leaned on her to say, okay, how do I do this? And even like just the other day, as we're like going through like new courses we're going to do, it was like, how do I teach this concept? Like, do I start forward? Do I start back? Do I start high level, low level? And so in a later life, I will definitely be somebody who goes after early education for kids. I think it's got to start in elementary school. I think it's got to start, immediately with kids. And like right now, a lot of people can do a lot with personal finance with their children, but they think that children are stupid. And I don't know why that concept is. So I'll give you a like case in point. And I don't know what the perfect model is. So my children are going to become my guinea pigs for this. Okay. Right. So, but case in point, we purchased a piece of property, like a real estate property. And my daughter has had interest in, like what my wife does. My wife does all the real estate stuff. And so she runs around and she looks at properties, and she always takes the girls with her. And so my oldest daughter said, well, like, what are you doing? Like, why are you buying this? And so we started to explain what we were doing. And we said, listen, you should help buy this property with us, right? And so we talked to her about saving and investing. And if she buys this property and helps us pay for it, then she can get a little bit of the income from it and stuff like that. So my daughter, Molly, contributed like $23.13, whatever she had in her piggy bank, and she helped go to the closing, and we made it a huge deal. We
Oh,
like
wow.
drew up these papers for her. We posted all over Facebook. We dressed up. We all dressed up, and it was like a big day for her. We went out to lunch afterwards. Like, we really made a concerted effort to show her like this is the type of activity that should be rewarded, right? That we don't dress up and go out to like lunch for her going to the store and buying candy. But she took some of her money to invest in property or whatever. And like that should be a big event. And so now on the first of every month, I write a little note in an envelope and I give her like her rent check in the mail, which is like I give her $1, whatever. And then we go to the bank and we split it up and we say, okay, 50 cents goes into savings and 50 cents goes into, your spend pile. But like she's 5 years old. She's learning the concepts, hopefully, that many people don't know when they're 25 years old. And so if it starts that early and she understands it, like that should be where all personal finance starts. So in a later life, that'll be my goal, is to do stuff like that.
Wow, that's a really cool thing you're doing for her. That's a very interesting story. Wow.
Well, and it's cool because my youngest daughter, after we went to that closing, so my youngest daughter's 3, we left that closing and she said, Dad, I want to buy some property.
Right. Where's my property?
I said, well, if you want to buy some property, you better start saving up. So I mean, like the idea is like an Option Alpha, like when people email me and they're like, hey, I want to open up an account for my son and myself so we can like track our progress separately. I'm like, yeah, all about like more power to you. Like get your kids involved in doing this stuff. Like it's going to take a generation to change, unfortunately. I mean, like a lot of it is just so ingrained. It's going to take a generation to change, but you better start somewhere, I guess.
Yeah, totally. So last time we talked, what was it, like probably like exactly a year ago or something, or was it 2 years ago? I think it was like a year ago. But anyway, you're involved in this project to sort of automate trading, and I think it was picking out. How's that going?
It's going well. It's going well. We've had some setbacks for sure for like integration. We thought we were going to launch in October of last year or like September of last year. Started to marry up the like trading platform with like the education, and that combination together created like what's called like security Swiss cheese. So a lot of what we have on the website was like plugins and third-party services, and that unfortunately just like left us very vulnerable to exposure. So could we have done it? Yes, like we could have definitely launched and we could have thrown something out there. Would we probably have had somebody hack us and potentially people's money stolen? Yes, probably. So we just have to do it and to basically like rebuild our entire development stack from the ground up. So it's no doubt like stressful because like it could be easy to buy a software plugin for like a checkout page, but if we do that, then we have somebody else like potentially getting into our system. So we're probably at the stage now where we're a couple months away from development. Like most of the hard development's been done. Now we're just like making the color schemes and the buttons and the sliders. And that actually is kind of cool. Like that's the fun stuff for me. So, we're at a stage now where once we roll it out, it's going to be a very big change. And then we plan to iterate, quickly on top of that. But we partnered with TD Ameritrade to do it. We had a very good conversation with another brokerage yesterday who wants to be a partner in it. So I think, we're at the stage now where we're quickly gaining steam, and I think it's going to be game changer. I mean, I really do. I think it's the idea of trying to crowdsource intelligence around options trading is not something that I think anybody has really done, and to couple it with automation is a really cool way to go. So I don't know what it's going to look like, in the future, but I think it will change things for sure.
Yeah, well, I will definitely stay tuned because I'm definitely interested in trying that out and checking it out once it goes live. It sounded really fascinating to me. So what would you say, like, who is your average person that comes to you to Option Alpha? Is it somebody who knows very little? Is it somebody who's trying to just starting out? Is it somebody who's has a lot of money? Do you have sort of analytics on who your people are in general?
All over the place. I mean, it's all over the place. So we have 157,000 members right now.
Oh wow.
In Facebook yesterday, I was like asking people like, hey, how should we lay out these charts and how should we analyze this? And 2 people who are members, like one was a NASA engineer and the other one was like a manager of a fund. I mean, like, so I think it is truly, I call it like internally, like we have a 2-humped camel. So we have this like demographic hump of like younger people, and it's not always males actually. We have a lot of females, which is good. But it's like younger demographic that, maybe has been through a little bit of the ups and downs before in the last like 10 or 20 years and is starting to try to figure out something early stage. And then we have another like hump of our demographic, which is later stage, people who are at retirement or near retirement, are sick of the ups and downs or maybe just the volatility and are trying to do something different, than what they've done before. So I think it's that kind of like broad spectrum of people.
Yeah, that's an amazing number of people, and I just wanted to thank you for having me on that podcast before. It's been amazing. Coming onto YouTube, it really is true. Like sometimes I think of myself just as a pure YouTuber, and you could be seen as a YouTuber as well, just from the content that you post there. Although I know your business is more focused a little bit differently, but just speaking as a YouTuber, it's very hard to get any traction unless other YouTubers embrace you in a sense, and you kind of have to be lifted up by other YouTubers. And you having me on that show was just a huge lift for me. I mean, I have people coming up to me all the time, and I know I've told you this before, but I have people coming up to me all the time and saying, "I saw you on that podcast," and it's opened so many doors for me, and it was a
Awesome.
beautiful thing you did for me. And like I said, at the time, I was thinking maybe I was having you on my show and stuff, and it turned out the other way, and was a huge bonus for me because I guess the way it works on YouTube is it's like if you go on somebody else's show, then you get the boost. And if someone comes on your show, they get the boost. I mean, depending on, the size, your relative size and stuff like that. But that was it was a huge door opener for me to get exposure, and I was super grateful for that moment. I know for you it's just one of 1,000 videos, but for me it was this huge deal. So
No, I
that's
appreciate it
awesome.
because like I try not to. We don't like I don't run a weekly interview podcast. So like for us, it's not about just like filling up airspace. I'd rather get like really good like quality guests, like topics that we haven't talked about, and try to really like teach people something. So having someone on like you, that was a market maker, like we haven't had that before. Next week we have a podcast coming out with two hedge fund managers. We have not had a hedge fund manager on the podcast yet, and that's going to be really cool to kind of have those perspectives. So that's what we try to do. So yeah, so it's thank you, I appreciate it.
Yeah, I've been watching that show Billions, which is these hedge fund managers in New York and stuff like that. That's another fascinating world, and I'm sure you were next to it a little bit, working for Deutsche Bank and everything. So for me, it would seem like it would be hard. It must have been a big decision to leave behind that corporate world, because that's like the cream of the crop as far as like investment banking and stuff. That must have been a big decision for you.
I did not. I have no regrets from leaving that world. I think like my personality is just not suited for that completely, like completely suited for that. Like when I was so I graduated from University of Virginia, and no joke, everybody in our business, like if you didn't go to New York and work for a bank or a private equity shop or something, like there was something wrong with you. You know what I mean? It was like that kind of like mentality. And at the time, like I had no idea, and I was like, okay, yeah, like that sounds like yeah, I'm gonna do this, and everyone's flying up for interviews, so like I'm gonna fly up for an interview and try to get an interview, and then you get the job, and I mean like no disrespect to like what they do, like they put in a lot of hours, but like I mean I was there at 6 o'clock in the morning, and like if you left before the sun went down or like even remotely close to that, like highly frowned upon. I ate dinner almost every night in the office. It
Wow.
was terrible. Like my MD that was in our group, and this to me like really solidified it. So like my MD that was in our group, he lived in New Jersey, but he would commute to the city and he would stay in the city 5 days a week. Okay. So like on the weekends, he'd go back to New Jersey, but during the week, he'd stay in the city. And every night he would call his kids to like put them into bed. Now that's awesome that he did that. And that if that works for his family, that's great. That was never going to work for me. So like the
Right.
fact that I
Right.
saw like this is the trajectory, man, I was out so quick. Like it was easy.
Do you think it's true that like they always quote this quote that like 80% of traders lose money? Do you find that is there like a lot and you were talking for a second about forex, which is a really tough thing. For me, forex seems impossible to trade, and it seems like almost like a crapshoot, and partially just cuz I don't understand it. But
Yeah.
do you, and I know forex like accounts like just churn 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 churn. Do you find that your subscribers do a lot of people just come for like a second and then leave, or does it how does it work as far as the number? And do you think like majority of your people? I mean, obviously you want to say everybody makes money there, but do you think that
Yeah.
a lot of people are successful from your experience with like the 150,000 people you have that you're teaching, or how is it work?
Yeah, I think it's an awesome question because I think it's a huge topic, like one that I don't know how to like get this across to like a lot of people's in their mind, I guess. And like I try through podcasts and videos and like explaining numbers, but like the topic of just like consistency and staying patient, I think in trading is highly undervalued in the market. And I think a lot of people end up chasing shiny objects. And so like this whole idea of like coming in and trying options trading for 3 months, like is never going to work. I mean, it's like trying to run for 2 days and then saying like either running is going to work or not. And so like I use the fitness analogy all the time because if you like, let me ask you this, okay, right? So if you eat well, you run, lift weights, do some sort of like exercise, you're going to be healthier, right? Like there's no disputing that that's a fact. Like everyone knows that's a fact. You eat well, you exercise, like just get those two things right, you're going to be healthier. But yet, like most people fail at the diet. And so is it the diet that's the fault? Or is it the fact that they just didn't stick with it long enough to actually see like success like come through? Like if you jump on a treadmill, you could run for 22 hours straight. But I promise you, if you're 100 pounds overweight, it's not like 100 pounds of, your body's going to fall off after 22 hours, right? Like you got to be doing it consistently. So I think the stat on trading, and I don't know who gets the stat, but it is somebody like started coining it. I've never seen any research on it to say like that it works or it doesn't work. I think for sure a lot of people just flat out quit or they run into a series of like systematic sequencing risk of trades, Like a lot of what I see on my end is people come in and they say, "Okay, Kirk, you said 70% chance of success." And I literally just had this like 2 days ago and it like frustrates me to no end. I called the guy, I spoke to him for like 30 minutes on the phone. I'm like trying to describe this and like it's not coming through. But he's like, "Oh, you said 70% chance of success. I've made 20 trades and now 15 of those are losers." And I'm like, "Okay, you made 20 trades. Like you could flip a coin 20 times and get 20 heads. Like that doesn't mean that the system is broken. That doesn't mean that the coin is, broken." So I think most people just flat out quit. I don't think they actually really look at it as a viable business to get into. People tiptoe into this business like they're just like dancing around the edges. And it's like opening up a restaurant. Like if you're going to open up a restaurant, you're not going to do it for 2 days. You're going to do it assuming you're going to have the restaurant for the next 20 years, or I would hope so. And options trading should be no different. So this expectation disconnect that people have with trading is probably the leading cause of it for sure. That, and I would say over allocation, position sizing, like all the classic investing mistakes. I mean, just like being too directional, position sizing like crazy, not having enough cash, only trading one product and then it goes crazy. I mean, like all of those, like people just fall into. So unfortunately, I think a lot of people just quit and fail.
Yeah, I think that people people have to kind of lengthen out their horizons more, as far as not just trying to make it in one day. A lot of people, they go for one day is like a whole, it's just they're all about that one day. Can I make money today? And if that doesn't work, then they start over. Or they completely change their strategy. It's. I totally agree. It's like that Warren stuff goes back to Warren Buffett quotes all the time. It seems like patience and
Well, and it's funny because like everyone brings up Buffett, and that's like the perfect segue for it. But like Buffett has gone through, and I have it in my notes because I literally send out this email to people all the time about this. So let me bring it up because I want to make sure I do this right. But with Buffett, his returns, like over like periods of time, like he's had like years, not years where he's underperformed the market and or lost money. And like people totally disregard that. And they disregard it because on a long enough timeline, he's done very well, right? But if you like micro analyze every month that he's like been an investor and trader, I mean, there's obviously bad, but that's what people do. Like they look at the broad strokes and they say, okay, Buffett's the best investor in the world, therefore everything he's done is perfect and whatever. Like Buffett's had years where he's underperformed. And then it was like he's had years where he did negative 37, negative 49, negative 51, negative 18, negative 16, negative 19, like, And you're telling me, like, no doubt he's one of the greatest investors of all time, but even he still can't avoid drawdown, sequencing risk, over allocation, improper position sizing. I mean, like, the best investor in the world still has those issues. And you're telling me that, like, you can't have those issues, you know? So I try to, like, tell people, like, look, if you're going to get into this business, you got to have a long time run, you know, like time horizon, because ultimately anything can happen in a month, 2 months, even 5 years. Like, anything can happen in that time period. Like, you have to have a long time horizon.
Yeah, I heard this quote from TD Ameritrade. It's from somebody behind the scenes at TD Ameritrade that they were kind of analyzing retail accounts to see which ones did the best, like in different market conditions, and they found that the accounts that had done the best were the ones of people who had died and just left what was in there, and the family had forgotten it was there, and they just left it there and the stuff had gone, up without changing it, which kind of speaks to, maybe not churning so much, or maybe, you don't have to do stuff as rapidly as possible. And I know some people are position traders, some people are swing traders, some people are day traders, this kind of thing. But I often think to myself of like, well, I don't know what the percentage is, but the certain percentage of fund managers is not able to beat like the SPY. Is it, would it be prudent just to put, a certain percent of your money just in the SPY and leave it there because these people try so hard just to beat the major indices? Do you think, like, my parents and my family's been very successful at like the buy and hold thing, buying the market, buying mutual fund, and putting money in a 401k and just holding it through time, and that's worked through a long period of time. Do you think that is going to continue, that strategy will continue to work like throughout time, or is the market kind of changing now? I know people can isolate certain sections of time where like stuff went sideways for a really long time and then went up, and then went sideways for a really long time and then went up. But do you think it's still like a legitimate way to deal with your money to just buy and hold long term?
I think if for the right person, it's probably perfectly fine. Like, I don't think buy and hold will ever disappear. I think passive investing on some level is going to be here forever. The problem or the rub that I have with passive investing is that, at least currently, it's never had really a major black swan event in the US. I mean, we've had many black swan events, but it's never really had a major black swan event. And so the more people passively invest, the more passive investing funds go up, and then the more passively they invest. It's just like buying at like what cost? I mean, at what valuation does it not work that you should, think about selling? For me personally, like, I can't stand, I would not want to go through 50% drawdown, right? So like, if you can hold through that, then kudos to you. But I think many people can't. Like, I truly don't think that people can. So while the indexes might be great passive investing, the actual results of individual investors are probably far from that, because many of them dump out at the worst possible time, or they forget to buy at the worst possible time. So even though the indexes say one thing, nobody ever holds through 50%, multiple 50% drawdowns. And that's another, like, I don't know if it's misconception, is just like clarification. Like, the index is only the index, and you can get the index returns if you truly never touch it. But how many people like mess with their strategy? Like, you can't tell me that nobody's ever said, well, maybe I'm going to throw some money into Tesla or Snapchat, whatever. And then they do. And then they mess with it. So, like, if you're going to mess with it, then mess with it completely, like, then don't do it and do something totally different. But if you're going to be somebody who's going to absolutely like live to the law and not touch it, I think you'll do okay. Me personally, though, I think you can do better with options with low volatility and not have as much, of the ups and downs.
Yeah, it was making me think of Netflix when you were talking about that. The stock, if you bought it, when it IPO'd or whatever, you could have made a fortune from where it is now, but it had so many drawdowns of like 90%, and nobody, like you said, you say you're going to hold through that, but you don't end up doing it when the time comes. It comes to sort of knowing yourself in the end that you're not going to do that.
Yeah,
It's like,
everyone looks at Amazon and they're like, oh, if I bought Amazon, I would have been a bazillionaire. And I'm like, yeah, but you would have gone through like 80% drawdowns, and you would have been absolutely stupid to continue to do that at that point. I mean, like, at that point, like, what did you know? Went through 80%, some cases, drawdowns. Like, is that rational? Would you have kept that? Like, oh, this internet thing is not taking off, whatever. But they don't. And that's the problem, is that they don't they don't look at it like that. They just look at averages.
Yeah, I mean, my channel, I specialize on shorting volatility, and we had a huge black swan event 2 years ago, the Volmageddon they called it, where a bunch of my viewers completely blew up their accounts, and I realized at that moment that I maybe hadn't been clear enough about like separating your long-term savings from what your quote unquote either play money or money that you're using to be more aggressively trading with, sort of. Um, do you see things in the terms of like long-term versus short-term money, or and do you have a a strategy that you like to tell people for like their longer term stuff? Now I know you've said like your life strategy is to kind of spread stuff, so spread your risk over maybe like real estate, different investments and things. But what would you recommend to people in general? Because I realize now, like when I'm doing a video, I have to say to people, look, man, don't, even if you love a strategy that I recommend, don't go all in on it, and it's not for your long-term savings and stuff, because people get excited. They hear a strategy, it might work for them a couple times, and then they just put everything they have into it, and it inevitably blows up on them. So what is your strategy for like long-term savings?
Yeah, I mean, I think so. Like my view on long-term stuff is I should be doing like daily and weekly activities that will eventually like get me there. So I don't separate it out and don't like there's no basket of money that I just like set in index funds, right? So like the only thing like full, and I have said this before, but full disclosure, the only thing that I can't trade options on is my wife's 403b because they won't let me do it. So I do like REITs that I'm familiar with, right? But everything else, like it's either in cash or in options trading. So for me, it's not something that like I'm like, oh, well, just trade options and have fun with it. No, like I really believe that options trading is a better way to go. So I'm going to do the daily activities so that in 20 years I'm end up like way ahead of the curve or doing well. And again, it would be no different than like fitness or like physical, like health. Like I want to be here for my kids in 50 years. So I'm going to do the daily activities that lead to success in 50 years, like health wise. Like, and you saw like before, like I'm drinking like these disgusting shakes that are apparently so good for you. But all that being said, like I I don't think anybody should put everything they have into the options market. Like you should have real estate, whether you have REITs or whatever. You should have probably some bond exposure. You should have just general savings. You should have what other investments, like do I think that a big portion of it should be in options trading? I do for me personally, but that doesn't mean it has to be a big portion for you. And moreover, it's not because I don't think options trading could get there. It's just because options trading is still going to go through cyclicality. Like we're going to go through probably years where we underperform the market and have drawdowns. And during those time periods, I had better have something else to kind of like fall back on. Another thing that people like often miss is just flat out savings. Like a 6% savings rate can do so much for your portfolio compared to like 10 or 15% returns. So if you're chasing all these massive returns, why not just allocate a little bit more money towards just saving a little bit more money? Like those little changes can make a big difference.
Yeah, I say that to people too. If you're saving a little bit extra from your job every week, that does a lot. To buffer volatility, let's call it. But it also, yeah, it helps build things up definitely.
Yeah, boosts. Yeah, I mean 6%. I don't know what the quote was, but it's like a 6% saving rate. Can like outperform a 15% return on no savings. So if you just add just a little bit to your account, you're going to do much better.
I mean, everybody has a different financial situation. Obviously, it's some if you're working a minimum wage job, obviously you're going to be in a different place than if you're an investment banker or somebody that has the ability to save more and structure their life differently. But the beauty about the way options trading has evolved over the last 20 years is that it no longer is a game where you need to have a huge amount of money to get going, or you have to convince somebody to back you or something like that. It's become so much more transparent, and you can play with smaller numbers now, which is awesome.
Yeah, I think it'll grow. I mean, I think it'll grow because people are, like as the costs continue to come down, as, hopefully technology improves and, is a little bit more efficient, I mean, like the world of investing continues to open up for people. And that just to me means, that we're going to see a lot more volatility in the future, as we get more people on board and they have more control to touch things than ever before. we're going to see huge swings in prices in the future. I mean, it's before, like, think 20 years ago, like, what was the process to go through and, like, place a trade? If you were a regular person, you had to call your broker, you had to do something, like, you couldn't move too fast. Now you can place, 100, contracts in 10 seconds on your phone. I mean, like, that to me means we're going to have so much more volatility in the future, of which I want to be part of none of it generally.
Yeah, I mean, it's funny, like you were saying when you were describing the demographics of your group, you were saying, well, some people are younger and have only seen a little volatility. It seems like we got volatility just like last December and stuff, where we hadn't had it for a long time. And things shifted gear a little bit when we came off the highs and we had that big down move in December. Do you buy into any of this stuff with like the market's been in a bull market for X amount of years, and so we have to sell off soon? Do you have like this sort of macro perspective in the back of your mind all the time when you're trading, that like, well, the indices are here and we're bound to sell off at some point soon? Is that something you think about?
So I'll like talk about it in 2 points. One, I think it's interesting that you bring that up, because the two hedge fund guys that I have on the podcast coming on for an interview next week, that we already recorded, it's just like going out next week. The whole topic of conversation was macro timing and like how you look at macro. They're a big macro shop, right? So they look at all the indicators and all the things, which like I don't do any of that. So I'm trying to like learn more about like how they look at it versus how I would look at it. I think there's value in understanding just like where you are in the cycle. So if we're at the top of the cycle, if we're at the bottom of the cycle, there's clearly value in understanding it. I don't know that anybody could ever consistently pick the top. I don't think anybody's saying that they could ever pick the top, and I definitely am not. But I think there's value in just understanding where you're at in the cycle. That being said, when I was like in my earlier days, like, and I'm very much a bearish contrarian, just like by nature, I guess. Okay, so I see the downside to everything. Like, if you show me a stock chart, I'll show you 10 reasons why it's going down. So like, I will show the side to everything. But I learned very quickly that my expectations in the market are almost never, in sync. And markets, as you know, like, can be irrational much longer than we can be solvent, right? So markets are definitely going to move. And so I would never put myself in the camp of it's going to go down or it's going to go up. I like the way that these guys actually described, in the sense of like, there's a probability that it could continue to go higher, and there's a probability that it could go down. And this is how we see kind of those numbers shaking out. Historically, like when these indicators are showing this, historically, that's not a good, time. Like, does that mean that we should tilt everything bearish? Probably not, but we should at least be aware that there's something on the horizon, that these things could start to rear their head and there's a reason for them. So I think having that type of awareness can help, but ultimately it's hard to do. Like, the duration that I trade is like 30, 40 days. I mean, so like, is a macro timing model going to work in that time period? Probably not.
Yeah, it's like I was taught to trade like by being put in front of a bunch of successful traders that had different ways of looking at the world. And to name a couple different ways might be like a technician,
Mm-hmm.
technical analyst guy who's really into the charts and really into patterns, trading fundamentals of like the earnings cycle, trading based on the interest rates and what's going on with the Fed, and trading based on like how much money am I putting in and what's the percent risk I'm taking. I'm betting $3 to make five. Looking at trades in all kinds of different ways, and I was just exposed to a lot of different things. And then, so they're kind of all in the back of my head a teeny bit. And I think that's a good way to go for people to expose yourself to stuff, especially stuff that you haven't heard of before or that you think might be hokey. I like to just kind of like, I
Yeah.
like technical analysis. To me, I think it's pretty hokey. But I do like to get next to a person who's actually made money and believe they've made it because of that, because maybe I'll learn something.
Yeah. Well, like the analogy I like to use is like a great chef. Like, if you have a great chef who's like amazing at cooking dessert, that doesn't mean that they didn't learn how to like cook breakfast and lunch and dinner and stuff like that. They just happen to specialize in dessert. So like, but they know how everything else works. Like, they know how to make eggs, they know how to probably make bacon, right? But they do dessert. And so like, as a trader, like, I do options, but I know how technicals work and like have an understanding of them, and I know how macro models work. And like, if you just know what like these other kind of ingredients are that could interfere with what you're doing, I think you'll be better off that way. But yeah, I agree with you. I like looking at a lot of stuff and like letting it soak in, but it shouldn't change my opinion dramatically.
Yeah, because with a lot of these things like technical analysis or like macro picture and stuff, it's, since the market is made up of all these people, if enough people are focused on that one thing, then it starts to be a self-fulfilling prophecy in a way. If enough people are thinking in a certain way, then you kind of want to be aware of that. I don't know how you might game it, but you want to be aware of it definitely.
Well, I think you're right. I think you're totally right. I mean, you look at I don't know who said that quote, but it was like you're right that somebody said the self-fulfilling, was it Soros or somebody, basically said like when markets go into a cycle like that, like let's say the markets go down, then people assume the markets are going to go down, so they sell, and then it goes down further, and it's just like a self-reinforcing process. And I think we definitely see that, nowadays. I mean, even more so nowadays because everything is so connected. I mean, the barrier between Main Street and Wall Street is like right in your thumbs in your phone, and that's why I think we're going to see more volatility, because people just jump on and off the bandwagon at the snap of a finger. And I think I think we're going to see much more volatility in the future.
Yeah, it's strange because you can make a case that, well, having more people involved creates more liquidity, and so maybe it would dampen things. But in the other hand,
Well, you're right.
people, they convey those human emotions of like panic and this kind of stuff, and jump in and add to the volatility at the same time.
Yeah.
Yeah, totally.
Like, I tell people like this thing right here is like a weapon of mass destruction, because you can ultimately, if you're fearful, hit the sell button and be done, right? And like 10 years ago, like if you were fearful of stocks, it might have taken you 3 days to sell, maybe. 20 years ago, it might have taken you a week to sell, and by that time you've calmed down. You talk to your wife, you talk to your broker, what. I don't know. So I don't know how it's going to shake out. I think it's going to be interesting for sure, but it's definitely going to lead, in my opinion, to a lot more volatility. And I don't think people are used to that just yet. So
Awesome. Well, listen, Kirk, thanks so much for coming on and talking to me today. I know you're a really busy man, and but I really I think you're a good guy, and I've always I feel like we have a good connection with each other, and we understand each other well. So it's fun talking to you, and let's stay in touch. And I wish you the best with your business and everything. It sounds like it's going gangbusters, and I hope it does for you for years to come. And yeah, and shoot me a note when that trading thing, the other trading thing goes online, because I definitely want to check that out.
yeah, man, we'd love to have you in there and get you in there and create your profile, get you trading in there. That'd be awesome.
Sweet. All right. Well, thanks for coming on the show, and thanks to you folks for watching today. And we will see you next time on the Short Vol Show Live. Thanks, Kirk.